I'm going to hand over now to Beatrice from Ernst & Young, who's going to talk about leveraging data. So thank you very much again.
Thank you. Hello, I'm delighted to be here. My name is Beatrice and I run the global business for data and AI for EY. And we hope to run a thought-provoking session. We might be a bit controversial, but we will be exploring with a great group of panelists. Please join me to the stage. We'll be discussing about opportunities to leverage data for commercial purposes. So today with me we have Georg, Daniel, Freddie, and Francesco. So please come and join. To the audience, please feel free to share questions, etc. We will get shortly with some quick intros, but we have also prepared a bit of like a pool question. So while the session, please feel free to share your opinion as well on opportunities. Maybe let's go through some quick intros. So please, Georg.
Yes. Hello, everyone. My name is Georg Ludviksson, co-founder CEO of Meniga. Originally a software engineer, but by now a serial entrepreneur, so a recovering engineer. Meniga has been around for 10 years. We're a global leader in personal finance innovation. We've been privileged to work with many of the leading banks in Europe and beyond on their digital banking strategies. Our core message to bank, ever since we were started, has been that to stay relevant and close to their customers, their digital banking has to evolve from a place just to transact and do banking, check balances and move money and so on, into more of a broader financial coach type user experience. And I think that message has never been more relevant than now. Everything we do revolves around using data to improve customer user experiences. We sell software to banks, but we also bring new value-added revenue-generating services into the digital bank. One of our main offerings now is a multi-bank cashback rewards network in the cloud that we are building out of the Nordics with some of the leading banks in the region on board. And cashback rewards is an example of what we think is one of the best use cases with clear commercial benefits for digital banking users, banks, and other stakeholders.
Wonderful.
Daniel?
Hello, I'm Daniel Hegarty. I'm the CEO and founder of Habito. We are a digital mortgage broker in the UK. So we are about 3 years old. 3 years old now. We set about with a mission to try and kind of unpick the generally painful and horrific experience of getting a mortgage for UK consumers. And we now originate more than 1% of all of the mortgages in the UK and are just on our journey to launching a range of other adjacent products in insurance and other forms of lending.
Good morning. My name is Freddie Kelly. I'm CEO of Credit Kudos. Credit Kudos is a credit reference agency based in London. What we do is we enable businesses that lend money to use data more intelligently, so specifically bank account transaction data through the open banking, through the PSD2 rails. We take that information, we reconcile it with a bunch of other data sources and provide predictions of creditworthiness. Our product is live across a number of verticals in the UK market, so anything from credit card lending right through to mortgages, motor finance, brokerage, and everything in between.
Good. Good morning. My name is Francesco. I'm the co-founder and CEO of TrueLayer. My background is I started early in my career as an engineer and have been involved with building a data platform and harnessing data for a variety of companies in the Valley. And 3 years ago, we embarked on this journey of making it easy for developers to connect with the open banking infrastructure, very much in the UK and now in the rest of Europe as on the back of PSD2. And so since our inception, we have been working with a wealth of fintech applications and later on challenger banks all the way now to large technology companies to understand how all those different part of the economy can leverage bank account data, transactional data for a variety of different use cases. And to a certain extent, we believe that also moving money is a form of moving data nowadays. So it's a really large spectrum of applications that is built on top of consumers and business bank accounts.
Okay, right. My first question, this is to all of you. Oh, thank you. My first question, this is to all of you. By the time we have been sitting here, just the last couple of minutes, Google has probably had millions of customers retraining their operations, yeah? And probably the average banks have learned nothing in the same amount of time. And I wonder if they are working on the right paradigm, because somehow I still feel that banks have, well, banks, probably most of 90% of the industries are creating that separation in time and space between the operations and where the clients, where everything, the life of a company, and the intelligence of the company. They spend most of the time moving data from here. Like, are they working on the right paradigm? What is the root of cause? Why I wonder the majority of the banks are not really leveraging data as the backbone for transformation and disruption. What are your views on that?
I can start. I think one of the interesting differences, I guess, there are plenty, but with big Googles and Facebooks of the world and banks, is we all fundamentally believe that those products are free, and we kind of sort of ignore, at least as regular consumers, we ignore the fact that we're paying for Gmail in the data that we're exchanging, right? And to some extent, banking is very much the same, but for a long time, banks have kind of, at least in the UK, where everyone expects current accounts to be free, they're not actually free, and we're now realizing that that data exchange is in some ways similar, and one of the things that these APIs allow us to do is properly capitalize on that data exchange and start to build value from it. But I would agree that we're definitely far, far behind those large tech companies in doing that.
Yeah, maybe also, we work with many banks, and there's a lot of talk at every bank we work with about being data-driven, and I think they are to a degree, and they're trying to change and making some progress, but I think it's also partly cultural. That's the curse of being an incumbent, or the innovator's dilemma, that kind of most people inside those organizations are measured on the short-term effects and the kind of historical P&L. So taking really note of these changes and changing in a big, decisive way is difficult. But it is happening. I think working with fintech, especially now with open APIs, is one of the kind of main trends where banks are actually leveraging data in a better way.
Any other?
I can take on this. My view is that there are objective challenges for banks to try to have the same aggressive profile that we see with other technology companies to actually harness the data. I think there are, of course, regulations, and I think the whole risk appetite of banks is definitely lower than maybe other part of the industry, where they can experiment with consumer profiling, with leveraging data in probably different ways. However, I think it's also culturally and technologically a huge problem. If you see how the most traditional banks are built, effectively they rely on very old technology, and that makes everything very more complex, because you think about doing something, and then you inevitably end up having to deal with your legacy infrastructure, and that happen to be a very limiting factor. So net new propositions like the Monzo, the Revolut, they have an advantage to that, because they don't have to deal with all these legacy components, and they can be way more aggressive in the way they develop their digital proposition. So I guess we see quite a rapid evolution now with banks using cloud technologies and starting to trust more and more to having some part of their technology stack living on Amazon AWS, using cloud services like yourself and so forth. And I think that's definitely a good sign, a good trend, because that in turn will enable this sorts of data experimentation at scale. then we have to look at customers, what they are asking, and effectively customers are asking to be served better. They are not asking companies to better leverage their data. And so in the end, we have to look at what is in there for the average consumer, what they do get back. Is better pricing, is more products, is frictionless experience, where is the benefit for consumers?
Yeah, I just particularly struggle when I trying to understand, because in the last 15 years, banks have been doing the same. They first started to create that intelligence in the data warehouse, then it was the data mart, then it was the data lakes. You might ask a bank and they might have 60 data lakes. So, at the end of the day, it's kind of that separation in time. And in the edge of the distributed technology and platform, I'm not sure if that is the answer any longer. And that was a bit of my reflection. Daniel, who in your views is doing well, for instance, in the lending business?
It's a tough question. I mean, in the somewhat kind of moribund retrograde mortgage industry, data utilization is pretty limited. So if you take mortgage as an example from the consumer perspective, it's probably the most complex sort of lattice work of eligibility and affordability criteria. I mean, there's over 20,000 different mortgage products in the UK alone, more than 90 lenders. And then on top of that, the underlying products themselves are complex. You need a reading age of over 20 and a university education to comprehend basic mortgage documentation. So the problem in mortgage is much less about using data for probabilistic or predictive means for credit risk, where the repossession rate in the UK is 7 basis points. Actually, much more for navigating that complex lattice work of criteria and bringing the right consumer with the right circumstances to the right lender and the right product. And as much as there's been, in some ways, interestingly, some of the advent of more stringent regulation in 2012 allowed for a kind of a more procedural approach to advice, just because the regulations told us exactly what we needed to ask and what we needed to do in that case, which has allowed for a slightly more kind of data-driven approach to mortgage advice specifically. In terms of utilization of alternative data for credit underwriting or anything like that, that is some distance away in the UK.
Okay. There are great questions coming from the audience. Thanks for being that active. One is, how will banks ever catch up on Facebook, Instagram, Google, etc.? And is customers interested in that close relationship with the bank, do you think?
Yeah, I think the customers are interested in a close relationship with anyone that can provide them a great user experience. And that is, I think, a million-dollar question. Will the banks be able to catch up? I mean, there are multiple forces of change now affecting them, the proliferation of fintechs, open banking, big tech players making moves in banking and so on. So I think there is much more sense of urgency to catch up and to stay close to their customers. The user experience is key. And I think generally there's too much talk of infrastructure and technology and AI and open banking, but too little focus on the actual use cases, because that's what matters in the end, creating value for the customers. And they still have the scale and the users, but I don't think their brand will carry them forward. They have to build the great user experience.
Yeah, no, I think that's right. A bit of a reflection. I see many banks under, well, not just banks, I think probably any industry going through a transformation program, yeah? And the fact, or maybe the reflection is, by the time they finish that transformation program, the gap with the digital giants is not only less, but actually it's increasing. So I think probably linear growth is not enough. I think exponential growth, it's kind of because of the pace of change, kind of technology. So, and I think probably data and AI, are part of the answer. Ethics and the ethical framework of AI, it's a hot topic at the moment. I mean, in your views, what is the ethical aspects to consider for a bank when leveraging data and AI? And will it lead to customer inclusion or exclusion? I think this is a question coming from the audience, which I thought was interesting.
I can take that. So I think there are a couple of things. So the first one to note, I guess, is everything we're talking about in sort of consented data realms is predicated on trust. And to the point about sort of some of these brands, one of the things that they do have is a trust relationship with consumers. To steal your, you stole it also, your quote about, the idea that we all as consumers trust big high street brands and big brick and mortar banks to sort of keep things safe, but then we don't necessarily simultaneously trust them to give us the optimal deal or the best price. And I think there's a question about, that's sort of more present now in this consent process is, what am I getting in return for this data sharing? And then the second is how's that data being used? And the short answer is it can be really tricky, right? Explaining, if you're doing something quite clever with data modeling, actually making that explainable, not just to a user, but also to a regulator, can be quite tricky. But I think that's not a new challenge. I don't think it's unique to financial services. And I think, honestly, the best way to look at it is if you're aware of the data you're sharing, you're in a much better position than if the data is being aggregated sort of without your know-how. So for us, the way we look at it from credit referencing perspective is that, if I'm trying to apply for a loan or a financial services product, I want to get that clear value exchange and give my data, which I own, to get a better return. And if I'm able to take controls, take the reins of that process, whether or not the outcome is positive for me in terms of an accept or reject, it's better for me to understand that that's going on.
Yeah, I think that's exactly right. I mean, every bank I know wants to be seen as a trusted advisor to their customer, and that means just behaving that way. And I think the Apple recently announced credit card is a good example. I mean, it's transparency, just being very transparent about the fees and the services, and that means everything. Banks and this, of course, applies to anyone that wants to be a trusted custodian of data, get the basics right, don't lose the data, keep the services running, and then be upfront about what you're doing with the data and what the services are, and it's as simple as that.
Yeah, I'd just add, I've done some purely academic work around looking at social media data, clickstream analytics, kind of non-standard data for credit risk underwriting, and it is it's certainly predictive, but what it tends to be is collinear with standard demographic indicators. So I think the kind of note of caution I would sound is that we can find like increasingly sophisticated ways to obfuscate the fact that we are using the same kind of traditional demographic exclusion kind of constructs, particularly in lending. So whether it's that we're checking the quality of your spelling on Twitter or the fact that you have a Hotmail account instead of a Gmail account, these aren't really attitudinal markets. These are in reality demographic markets.
Okay.
But then there are philosophical aspects, like second part of the question, inclusion or exclusion. I mean, in a data-driven world, I think in many cases we can get to very personalized pricing and price discrimination. And to some degree, it's fair that someone with a much better credit rating gets a better deal. But in other ways, maybe there are limits to that. So I think that there are real kind of philosophical questions around this also.
I think on that, my view of exclusion specifically is that, definitely you don't want to have data-driven products that are like leaving out opportunities for some unserved demographic. But I think the big opportunity there is to how you harness this data to actually coach and train and advise people to make better financial decisions over time. I think that's a key point. I don't feel that as a consumer historically I've been like that much advised by my standard average bank to what is a savvy financial decision, whether it's to make a loan or to borrow some money or whether it's the good credit card. I think like in the UK I was reading some numbers. There is I can't remember the exact figures, but it was a staggering number of consumers that are on the wrong financial product. Like we're talking about in tens of millions. So I think that's clearly the opportunity to purpose leverage this data for actually reshifting, addressing the needs of large part of the population. So to that extent is a form of exclusion, excluded to be on the right product at the right time.
Okay, so now let's be positive. Let's change the tone. Let's talk about opportunities, kind of use cases. It's a very open question to you. I mean, I'm sure you will all talk about things around, or opportunities around the business, yeah, that you guys have very successfully set up. But kind of more broadly, what are the largest opportunities you see? And fraud, for instance, was kind of an example that came. And also your recommendation for the audience on how to start, where to start, what's your term, what's middle, like nobody's starting from scratch, yeah? What could be a smart way to get there, yeah? So, very open question, opportunities and a bit of the path towards.
So, I always ask myself, okay, if I have to start once again with a new startup, with a new company, where I would start. And I think I see massive opportunities right now in the SMB space. I think like I still have to see a bank that is truly caring about the most exciting part of the economy, which is like online enabled businesses. So it's the e-commerce or like all those startups. And I think that there is a company in the US called Brex, which is probably like starting to do something in that space. But I am always very puzzled, and I always ask myself why, for instance, my average SMB bank doesn't ingest data from eBay sellers or Amazon sellers. Like why there is no data integration and product integration with all the different tools that the internet-enabled business is using on a daily basis, and the data that is capturing, why this data is not then integrated into a more tight experience with the bank. Because in many cases, the bank is actually providing a very important part of the stack is anyway like the financial utility. Yeah. And having like a tighter, deeper integration at that level, I think it's quite something. And I'm very surprised that no many startups, no many companies are actually tackling that space. I think it's a large untapped opportunity.
I agree.
Yeah, I share that there's a big opportunities in MSME, but and also, even though we're often frustrated at how things move slowly often, I think we are in the middle of a revolution, and I think on the positive side, we are seeing proliferation in interesting use cases. And again, I think the real discussion should be about value proposition and actual use cases. People don't care about open banking or AI or data, they care about kind of good services. And I see a lot of banks already adding and many working on many other use cases that really matter. We are seeing proliferation of services for better credit scoring, for subscription management, for personal finance management, for all sorts of use cases. And this is what matters. And I think the key kind of accelerator of this is open banking, and that now banks are, to various degrees, creating capabilities to send their data to the cloud to different service providers or working on some of it themselves. And then they can offer many more services than they could before when they did most things in-house. So I think this is really happening, and there's no lack of opportunity. But good use cases where there's clear value is still in short supply. So that's the main advice, focus on the use case.
I think it's really hard to think of a business where more data isn't going to make some huge improvement. And so, some of the things we've talked about are sort of obvious first steps, but there's a lot further we can go. Yeah. I remember I was sitting listening to a panel discussion with one of the, I think it's a Y Combinator partner, and they were saying, so I often notice this driving in a bus in London. You see like office buildings, you see rows of people with desks, filing cabinets, printers on the end, and you can think of all industries where this is true. I think they're obviously not going to exist at some point, right? All this processing, all this like manual stuff that could be automated. And so I guess the question is like, what do we give the customer as a sort of benefit for us saving all that money on that cost of processing and data? Yeah. And I think that is something we're only really scratching the surface with.
Yeah, I guess I would just add to that. I think we're starting to see utility and convenience trumps everything. Yeah. Like it is really all there is. And I find it really curious, and I would say even in my own business, we're mostly focused on quite small kind of point solutions, like the optimization problem of which mortgage should I get, or what cashback should I be getting, and so on and so forth. And actually, like, a a person's financial life is a much more complex, multivariate problem. And actually knowing the right one of a given thing does in no way solves the overall problem. So I think, a much tougher question is, should I put my savings in a buy-to-let property or an ETF or into my pension, or should I pay off some of my mortgage? And at the moment, there is certainly not even the beginnings of a kind of a data-oriented approach to solving like that larger optimization problem of consumers' financial life. But I think that really has to start with data, right? So open banking solves kind of one side of the ledger, the credit file solves another, but there's still quite a lot of data that is kind of hidden from view in the customer's financial life. And I think whoever can solve that will be in a brilliant position.
Okay, great. Well, I think this was coming to the end. Before we finish, just a quick reminder to please fill the feedback survey for this session. That would be very helpful. And please come to the stage.
Great. Thank you. Thank you so much. That was great panel session. So thank you for staying with us. Thank you for those of you that have joined us during this session. We're just going to, as I wrap this session up, I'm just going to bring the initial poll back on so that those of you that weren't in the early stages, basically asking, are regulators sufficiently aware and empathetic with real-world dynamics and the commercial realities of our data-driven financial services and payments markets to be able to regulate effectively? This is your last chance. In the next 20 seconds, we're just going to take a snapshot of this. So please take this last opportunity to change that poll if you want. And then in a moment, we're going to bring up a final snapshot poll. But just as we wrap this up, we've heard some really, really interesting things this morning. GDPR, we're a year on. We've talked about me2B, great. Talked about small data, getting down into the detail. We've heard some great things from this panel about trust and about making sure that we're looking at the real detail, looking at what banks as utilities in this sector can really offer. So I think it's important that we hear what these guys have said. If you've got burning questions for them, grab them afterwards before they get out the door. So we're going to cut this poll now. That's the final position on that. And we're going to bring up the very final snapshot poll. Very bold statement. Have European regulators created a regulatory regime? So thinking about our trust-based financial services and payments industries, have we got a regulatory regime that risks an uncompetitive national and Europe-wide economy? Right, come on, I want to see some more in here. Two votes is probably, that's 8. So I'm going to give this another 30 seconds. This level of interaction is really important. I think we need to, as I said in my opening session, we should all be understanding that a regulator cannot possibly understand our complex industry. And we need to work with them so that we're not just reacting and responding to the regulation that comes through, but we're helping shape that from the earliest possible stage so that we get what we want. So even if we're saying that regulators are relatively ignorant of what's going on in our marketplace, that's not pointing the finger at the regulators. That's saying to all of us, we need to engage more strongly. Thank you for your responses to this. We're going to freeze that there. It looks like we're saying regulators are doing a pretty good job at getting close to us. So that's excellent. So thank you. Please join me in thanking our panelists and both these guys that were here and Aaron and the previous guys. Thank you very much, guys. That was great.